Okay, our 10th and final myth-busting effort in relation to MTD for income tax, which is coming in April 26, is we are going to try to bust the myth that this is stupidly complicated. We're pushing our luck a little bit here. I agree. It's pretty stupidly complicated compared to what you've had to do in the past. But nevertheless, we're going to look at the silver lining, and I'm going to mention two specific easements that HMRC have put in place to recognise the fact that they need, where they can, to make things simpler. So the first one is an easement to do with joint property income. And if you have joint property income, which should be declared each quarter under MTD for income tax as of next April, starting next April, the easement here is that you can just report the income in the quarterly updates. You do not need to report the expenses. You can compile your expenses and report them as part of the end of year final tax return part of the declaration. The second easement is that you can produce simplified 3-line accounts, which essentially means your income and your expenditure with no analysis beyond that. So total amount for income and total amount for expenses and no further detail. So that's a second easement. And the third is that you can actually combine that. So as a property owner with income and expenditure to declare in quarterly updates, you could actually use both of those easements together. Just report your single value of income each quarter, and then in the final declaration you could compile the total value of your expenditure and submit that as part of the annual declaration that we do at the end after the 4 quarterly updates, akin to your self-assessment return as you know it at the moment. So grasping at straws, you might say, and you might be right, but a couple of options there to simplify you and make the case that it's not quite as stupidly complicated as it first appears.